coverage. The name of the company is Flexible Solutions International, ticker symbol FSI.
Yeah.
Stock price roughly nine-ish. We have a 12-month price target of 12.
Yeah.
So that points to 20% plus upside. The company, very interesting company, a lot going on. They make biodegradable polymers that are environmentally friendly chemicals. And they're used to control water evaporation, even in swimming pools, to make the water stay warmer longer and cleaner longer. A lot of swimming pools out there. Also, it has other very strategic, broader-based uses in other industries. Importantly, the company is also going through a metamorphosis in their strategic process, where they're dealing with the tariffs in a very creative way. They're developing their new products, the aforementioned, in Illinois. And they've always had operations in South America, Central America, and they're going to maintain those operations. So they're able to not incur a tariff and get their new products developed. So it's very, very creative. So we're expecting some very good growth from their new products, and we're expecting higher profitability based on the way they have restructured or strategically aligned their business now. So we're getting pretty ready for the presentation. We have the CEO, Dan O'Brien, joining us from the home office or his boat. Maybe it's one and the same. Not kidding, but coming up very soon. And it's Flexible Solutions International, FSI.
Okay.
Good morning. Am I live?
Yes. Hello, Dan. Can you hear me?
I can hear you.
All right. Well, nice to chat with you again. And thank you for joining and participating with our conference. We have a room full of very eager, open-minded investors this morning, and an online crowd as well. It's significant, waiting to learn about flexible solutions and your unique new products and the way you manage the business very efficiently. So are you enabled to turn the slides at this point, Dan? You can take it from here.
Yes, you'll need to provide me with control over the slides. I've got them on my screen, but I do not have control yet.
Dan, right?
Dan, yeah. Or I can do it. Better not keep me away from it.
We're not going to be able to see him for this presentation?
You mean like live in person?
Like we did with Mark, yeah, the first one.
Yeah, I don't know. Well, that's a good question.
Okay, here you go. He's a presenter now, so I don't know if he's going to have access to the files on our. Okay, that's what okay. If I could get this up. Okay. Yeah.
Do we turn them here manually, or is he going to turn them?
Yeah, no, we have to do it here.
Okay. Dan, we're going to turn the slides at your command, so take it away. Show me where to do it.
Right, that arrow. Yeah, that arrow, yeah. So
That's forward?
You see? So So you hit the right.
Okay. Hello, Dan.
Hi.
Hey, Dan,
Okay,
go
still
ahead.
don't have my presentation.
We have it up. We can see it. We'll turn it here manually. You just say turn slides and we'll do it. So
Okay,
go
I'll do
for
that.
it. All righty.
Good morning, everybody. Sorry for the AV issues, but at least we don't have a burn on a film. That's over and done with. Welcome, and I'm the CEO, Dan O'Brien of Flexible Solutions International. Slide 2, please. Because I can't see the slides moving, I'm going to assume that it moved to slide 2 and the safe harbor provision. The Private Securities Litigation Reform Act of 1995 provides a safe harbor for forward-looking statements. Certain of the statements contained herein, which are not historical facts, are forward-looking statements with respect to events, the occurrence of which involve risks and uncertainties. These forward-looking statements may be impacted either positively or negatively by various factors. Information concerning potential factors that could affect the company is detailed from time to time in the company's reports filed with the Securities and Exchange Commission. Next slide, please. We started in 1998. You can see on the slide that we started with a swimming pool product. We still sell that product. We continued with an invention that saves water from reservoirs and canals. I would like to point out that it's been unsuccessful from the point of view of the huge markets that are available. And we attribute that to a fairly simple problem. The customers are bureaucracies, and saying no is always easier than saying yes and losing your job and your pension. The second problem, of course, is that after the product is applied, it's invisible. And selling invisible products is a very difficult problem. Slide 4, please. Next slide. In 2004, we had the opportunity to buy the assets of a company that was going bankrupt, but which had great technology and a lovely factory and some very good people. We did it. It was called Donlar, and it's now called our Nanochem division. And it's specialty chemicals for oil field, fertilizer, detergents, wine. Very good business. As you can see from the slide, we started with not very much, and we're now doing quite a bit through this division. In fact, it's the biggest division of our company today. It was an interesting experience, taking over a company from management that was not focused and was charging too much for their services, and turning it into a profitable and growing division taught us all a lot, and we enjoyed it very much. And it's now ready for the next transition, which we'll talk about a little later. Next slide, please. In 2012, the Nanochem division was able to expand into additional products. The usefulness of our original polymer, polyaspartates, in the agriculture market really showed us that there were other opportunities in the conservation of fertilizer world. And the next two products that we brought in, EX10 and Sun 27, Sun 27 and N-Saver 30, they had an interesting aspect. The first polymer saved phosphates. And the second polymers, the nitrogen stabilizers, saved nitrogen. So it put us in a position of being able to conserve all parts of the agricultural trinity of fertilizers. We're pretty happy with that. These sales are growing. Much of it goes through our Florida LLC customer. And, we feel that this is an area where we'll be successful in our new Panama division, which I will speak about in just a little bit. Could we go to the next slide, please? This one's just a simple picture of our operations in Illinois. As you can see, it's a pretty substantial place. This entire facility is being repurposed for food grade. So it's becoming a very valuable US-based manufacturing operation for products made in America to be sold to Americans. Could I have the next slide, please? And here's our segue into food group. We didn't invent this. The people who did invent it are in Italy, and they have the patents, but they came to us as the premier manufacturer of polyaspartates and said, would you like to share the cost of getting food grade approval for your product in return for an evergreen contract to supply us? And we said, yes, and proceeded. So the particular food grade aspartate, potassium polyaspartate, is now food grade approved in both Europe and America, and it has been very successful. You can see from my writing that there's a fair amount of volume available. It will be self-limiting though, because the amount of wine made on Earth has a limit, and the use of this product, just as an anecdote, is 10 grams per hectoliter, which is 10 grams per 100 liters. So we needed to find something as big as the wine industry in order to get a significant volume. Next slide, please. 2022, this is when we started the projects that are coming to fruition now. We obtained debt, we increased our equipment, we improved our employees, we learned all the ins and outs of filing protocols with the FDA, being inspected, having the FDA has a wonderful habit. They inspect at least once a year without warning. And we think this is great because we always operate it at the best levels. And there's competition in these markets. And we feel that all we have to do is maintain perfect quality. And over time, we will attract business that is being lost by people who weren't maintaining perfect quality and suffered an unexpected inspection. So we think this is a great opportunity for us to use our skill set to become a respected part of the food chain, and also to be positioned so that when other people make mistakes, it results in opportunities for us. Could I have the next slide, please? Now we're up to this year. The work we started in 2022 is bearing fruit, and it's pretty significant for a company that last year had revenue of 38 million And this year is moving towards a $30 million contract, followed by a contract of 6.5 to 13 with an opportunity to go as high as 25. So I've actually said in my SEC filed speeches that we have a strong belief, not a guarantee, but a strong belief that we can double our revenue across the 2025, 26, and into early 2027. We'll certainly be aiming for those run rates, and it's highly likely that we will be at a double by year end 2027. So those are our goals. They're not forward guidance. They're the goals of Flexible Solutions, but we believe that those goals, combined with the contracts, which we've filed in redacted form, really support our goals. And this is where we're headed. I should point out the last line on this slide. We don't expect additional equipment or capital improvements for the second contracts. We have the equipment on site. There will be little things, maybe 100,000 here, 100,000 there, but nothing that is in the $1 million range. And certainly we do not expect to have to do any capital raises to reach full production. Next slide, please. Okay, we see new opportunities. My goodness. Yeah, sales to the new and existing customers and the existing product lines, those are going on. Developing new lines of business and manufacturing, yes. In the food grade Illinois plant, we are already doing basic research on additional products that we could make. Some are more advanced than others. None of them are likely to be major contracts before we've finished rolling out the 2 contracts we have all the way to their maximum. We know better than to try and do too many things at once, and doubling your revenue in a couple of years with a couple of major contracts is plenty for us to do at the Illinois plant. Down in the Panama operations, we have the opportunity to increase sales of the existing products also, but we're fielding inquiries from people who are internationally oriented and have already seen that what we're doing in Panama would allow them to be more efficient. So we're looking at opportunities there as well. And then finally, acquisitions. Now we do acquire and have acquired over the years, but we're pretty picky. It's usually got to bring its own management because we're spread thin. It's got to be in our line of business, so we don't have to learn everything from the beginning again. And it's got to be profitable already, and of course available at a fair price. So while we're always looking for acquisitions, they take a long time to find the right ones. And we want to caution you that until we find correct acquisitions, that's an area where we look but don't buy. Next slide, please. Okay, several times in 2024, we made news releases about the potential of moving into the drug compounding industry. We bought a vial filling machine. We have it in storage. It can be set up and placed in operation relatively quickly. And there are businesses that can be pushed through that line. When we did this, the GLP-1 business was huge, and compounders were falling all over themselves trying to find ways into the business. As you all know, Eli Lilly and Novo Nordisk have managed to increase their production capacity, and GLP-1 is no longer on the shortage list. That means that if it's not on the shortage list, we are not allowed to compound it. So the opportunity passed us by. On the other hand, there are other opportunities. I mentioned one there, lidocaine. But perhaps the more interesting situation is that GLP-1 is a peptide drug, and it's the first one to reach the market. But there are 100 others in development. The probability that one or more of those drugs will be commercialized by a company that does not have enough production capacity, and we are potentially there as a contract producer, at least for the bottling end or the vial filling end of it, is fairly strong. So we're keeping our ear to the ground there. But as you'll notice, we would require a large contract to be in place before we move forward on this, because we'd have to make a new drug level clean room and hire additional people. So that is a longer term project. Next slide, please. There's just a picture of the line. And gentlemen, I think I missed a slide, so I'm going to go up. No. My apologies. I did not miss a slide, but I'm going to talk about our Panama operation right now. All right. Flexible Solutions, through its NanoChem division, has suffered since 2017 under the original tariff regime, which made it possible for us to remain in business in America, but not particularly profitable, and definitely difficult, because our international customers were not interested in paying a premium just because the production came out of America and had higher tariffs on the way for the raw ingredients. So we had to keep our prices down and apply for the government rebate program for exports. It's now coming on 8 years, and we have not received any of our rebates back. There's a lot of money in an American bank account. That money is not shown on our balance sheet because the auditors, and rightly so, after 8 years, are concerned that it's not collectible. That sort of government friction caused us about 2 years ago to decide that we needed to do our international production for international customers outside of the United States. So we developed a program, and we have rented space in the country of Panama. We are in the later stages of installing all the equipment, and expect to be in production as soon as possible. Now there's still one more permit, the occupancy permit, but we're expecting that we can be in production relatively quickly. The point here is that we will not be paying the American tariffs when we import raw materials from around the world into Panama. And our customers will still pay tariffs when they import the finished goods into whichever country they are in. But the friction of the American tariff program will be gone for all our international production. And this is of our polymers and our agriculture products. As a result, we're expecting to be able to grow. We're expecting to be able to have higher profits, and we are expecting to be able to find new product lines and new customers, because it's a much more efficient way of doing business than we were finding in the United States. A final point on that is that we do expect that we'll be able to sell some material into the United States from there and support some of our American customers as well. So it's a very, very good thing that we've done there. And it had a secondary advantage. We have now freed up 100% of that factory I showed you back in about slide 5 or 6. 100% of that factory is now available for food grade production in the United States for US customers. That's going to allow us to expand quite significantly without any further capex in the form of new buildings or new spaces. So we're feeling very good about that. Panama was a good choice. And then a final comment about it is, until we moved to Panama, which is happening very soon, every raw material coming in from internationally was landing in either Prince Rupert, Canada, or Long Beach, California, and having to go by rail and truck from there to our Illinois plant for remanufacture. And then from the Illinois plant, it was having to go to either Montreal, New York City, Charlotte, or back to Long Beach for export. So in Panama, our factory is 20 minutes from the port, the inbound port, and 20 minutes from the outbound port. This is going to help us a lot, and it's going to help our customers a lot. We feel that we're going to be able to deliver a week quicker than we could before. We also have the opportunity, which is quite interesting. We can export from either port or either side of Panama, either the Caribbean side through the canal, or the Pacific side direct from our factory. There's also a rail line that goes from our factory area across Panama to the Caribbean port. So we've got multiple export opportunities, and we feel that we've done a really good job of finding our next business. Okay, I'm back at slide 13 now after that sidetrack. There's two key people in our company. I'm speaking. Sad my dad's gone, but he sure helped me and us build a very strong company. And 8 years ago, one of our executives said to me, you know, you should hire George Murray. And I said, George Murray works for a customer. You can't go headhunting your customers' people. And they said, oh, well, George is really good. So my next move was to go to the company that owned the company that George worked for and say, hey, how'd you like to sell some? And we bought 65% of our E&P division, and the bonus that we bought with the division was George Murray. He's now manager of all FSI operations, and he's doing a great job. He has stick-handled the movement into 100% food grade in Illinois, while I've been freed up to work with another director, Rob Helena, to put the Panama operation in place. George and I are a great team, and I look forward to many more years of working with him. Next slide, please. Well, that's a balance sheet, and we feel that it's pretty strong. We feel that we can continue being profitable. I should mention that this year is a transition year, and there you'll see in our news releases and in my speeches that developing a second factory while transitioning your first factory definitely has some extra costs that are not capitalized, and they do hurt the bottom line temporarily. But I think if we look forward to 2026, and you'll see that in the analysis, that this is the year when we put in place all the mechanisms necessary to be extremely profitable throughout the future. And next slide. I'm purposely not doing that naive trick of just reading the whole slide to you. I'm sure you guys can read faster than I can talk. Should mention that we did change auditors recently. That was not our choice. Our previous auditor had decided to let all of its US audit customers go. There was a silver lining in that. Assure is much, much better than our previous auditor. They are very helpful. They are very aware, and we certainly appreciate the fact that we were forced to move. Gentlemen and ladies, that concludes my presentation, and I think we're going to switch to a question and answer. And I haven't done a presentation yet with Singular. This is my first, so bear with me as I learn how to do the Q&A.
That's what I'm here for, Dan. I'm here for take you through this thing. So the floor is now open for questions for Dan. Yes, sir.
Hi. Forgive me. I went to school for investigative journalism. So this is. You said that you moved to Panama because of the tariffs. That doesn't seem like something that can happen over the course of 9 months. And Panama does have a 0% corporate tax on any sort of foreign income. Is that why you did it?
No, it was definitely not a tax move. I think maybe I should explain. Most of our raw materials for our agriculture and polymer business are made in China or in South Asia, and they carry pretty high tariffs if you bring them into the United States. However, about 70% of our customer base are international, and they rightly expect that they should not be paying tariffs on products that come into Canada or come into the United States, are remanufactured and then exported to them. So we were finding ourselves in a position where it was very difficult to be profitable, and where those profits that we were making on some of these products were ending up locked up in the U.S. export rebate program. Because I will admit very much that there is a rebate program. It's just extremely inaccessible. So is that a better explanation?
I was just, because the whole tariff fiasco has started. I know there were tariffs before Trump. Trump's only been in office for 9 months. So if that was the reason that you had started before, that's too quick to move an entire facility, I'm sure.
You're absolutely right. We couldn't move in 9 months. We started almost 2 years ago.
Well, there are other reasons to be in Panama. Bananas? Dan, I have a question. Early in your presentation, you highlighted a ramp of exceptional growth. It looked to me like a near doubling of your revenue base moving ahead. And could you take us through a little bit of how that ramp is going to develop? And what are the products, fundamentally, what are some of the key products that will drive that?
Okay, well, first off, our legacy businesses of ENP in Illinois and all the business that's moving to Panama, they will continue to do the type of revenue that they've done in the past with organic growth. The Illinois factory that is converting to completely food grade has one contract for the wine group, which is already in production. But there are two more contracts which were outlined in the slide, and I think that's where you're focusing here. We are constrained by the contract. I can't tell you what the product is, and I can't tell you who the customer is in either case, but I can tell you how we're going to ramp up. The second contract is in the process of final testing before ramping to commercial production. And when we receive that final approval by the customer, we will be announcing it because we feel that that's pretty significant. We're expecting this to happen in the next weeks to months. And we're expecting that that second contract, the smaller of the two, that goes from about 6.5 to 13 million, with the option of a double at some point to 25. We expect that one to have a high probability, not a guarantee, but a high probability of showing revenue in fourth quarter that is large enough to be visible in our financials. And we are expecting, but not guaranteeing, of course, because I've got to be careful, but expecting that the second contract, the one we announced in July, will be running at full speed throughout 2026. So that's a pretty substantial jump in revenue. During the fourth quarter, we expect to finish installing all the equipment and start preliminary production for the first contract, the 30 million maximum one that we announced in January. The reason it's behind the second contract is because it needed equipment. The equipment had to be made and installed and tested. But we're expecting that will take place in fourth quarter. We will announce that the equipment, when the equipment has reached production status, and at that point, we're expecting the customer to say, please start going as quickly as you can. They want this to be started as fast as possible. So we're seeing a large proportion of the maximum 30 million will be part of our revenue in 2026. And the remainder we hope to have as our revenue in 2027. So that's how the ramp up goes. And at this point, we have not encountered any problems. And as I say, we'll announce when we start commercial production of the second contract. We'll announce again once the equipment for the first contract is in place and tested. And we'll announce a final time when the first contract hits commercial production. So there'll be clarity on the revenue end of everything, and the production and the two places I can't give you clarity or transparency are on the customer name or the actual product.
Well, it sounds like some exciting opportunities. And we're about out of time. Any closing comments, Dan?
No, thank you for letting me present. I really appreciate it. Hopefully I'll be presenting again on the next one, and I'll be able to give you some actual successes instead of what we were planning to do. I'm going to be telling you what we actually did. So I'm looking forward to that.
Thank you, Dan. Thanks for joining us.